Hello everyone and welcome to Moementum channel. In this video, I want to walk you through my dividend stock investing portfolio. I want to show you how I've grown this portfolio over time and how I intend to make it into a bigger position in the next several years. I hope you enjoyed this video. For those of you who don't know, Wealthsimple is an easy tool to invest in the stock market through diversification and by owning low-cost exchange-traded funds. With Wealthsimple, you do not need to be an expert in investing. All you need to know is that your money is being invested safely through diversification in a different number of investing options depending on your risk tolerance. For myself, given my age and my interest to grow my funds into a bigger position, I've chosen and opted in for a more riskier choices. In fact, my investments are about 90% into stocks and only about 10% in bonds. In my opinion, that's a good balance to have, particularly if you're in your 20s or even in your 30s. That's a good mix to have. So let's get into it. As you can see here on the screen, currently I have about 38,000 in my portfolio, and I do have two types of accounts here with Wealthsimple at this time. One of my accounts is an RRSP, or a registered retired savings plan, and the other one is a TFSA, which is a tax-free savings account. You can see the balance for each of these accounts and their return so far overall. Let's also take a look how my money has grown over the years. What's been absolutely inspiring to me is the fact that I started the year with this much smaller position. So you can see in the beginning of 2019, I had close to $16,000 saved. As time passed by and over time, I managed to grow this position by about 22,000. So that's a decent amount of savings over the past 12 months. I can also show you the breakdown of my savings over the past 6 months. As you can see, in July, I had closer to $3,000 saved in my accounts. What's fascinating about the Wealthsimple tool is that as you click on each month, it also shows you the breakdown. So for example, you could see how much of your savings was put in each one of your accounts. I do have, as I indicated, 2 accounts, so you could see the breakdown per month and how I allocated my funds into these accounts. And if I choose back again, you could see what's my average savings and investing over the past 6 months. But let's take a closer look how these funds are invested within the accounts that I have in Wealthsimple. What type of stocks and exchange traded funds my funds are being invested into and what has been the return. Let's take a look. So first, we're going to take a look at my retirement account. This is an account that I've had with Wealthsimple for a longer period of time, closer to 2.5 years now. Here you could see what's the risk tolerance that I've allocated for my account. I've chosen the highest risk, which is a 10. In this breakdown, your funds are being invested 90% in the stock market and 10% in bonds. And the bonds portion of your investment is mostly for kind of balancing your risk and ensuring that in the times of high volatility, your funds are not drastically dropping, particularly if there's a sudden drop or crash in the stock market. Let's take a look at the holdings that I have. So this is how Wealthsimple in their high risk portfolio invest the funds and the breakdown according to their targets that they do have. The first category of funds that Wealthsimple invests the funds into is the US equities, and for that they choose the Vanguard Total Stock Market ETF. The ticker symbol is VTI. I have closer to 23 shares here, and the performance has been a staggering 15.6%. The second category of funds that I do have is the international equities. And for this category, we have the IEFA, iShares Core MSCI exchange traded funds. I have closer to 57 shares here, and the return for it has been 4.9%. The third category of funds that I have in this portfolio is EEMV, Emerging Market Equities. And for this category, the return has not been the greatest. In fact, it's a negative 0.1%. While some of these exchange-traded funds are not doing well, Wealthsimple uses a smart kind of approach to investing, whereas as you continue to put more money into your account, it kind of looks into the balance that you possess from each one of these categories, and if for any reason, like in this case, the value of an exchange traded fund is lower, they start to invest more into that because they know the long term, they have trust in these exchange traded funds. So they want to make sure that you take advantage of the ups and downs of the market and you adjust your average cost for these exchange traded funds, taking advantage of the dollar cost averaging. Buying more of a stock when the prices of it is lower, that way you're bringing the average cost for that specific stock or ETF lower. The fourth category of accounts that I have here is the XIC. It's a Canadian equity iShares Core. With XIC, I have 90 stocks, a little bit over that, and the return has been 7.9%. As for global equities, I have ETF funds in ACWV, which is an iShares Edge MSCI. The return for it has been 2.7%. I have close to 20 shares of that ETF. And lastly, for the US equities with Canadian Hedge, I have close to 20 shares, and the return has been a staggering 15.4%. Now moving on, and for the fixed income, this is more for managing the volatility. I have close to 88 shares of BMO long federal bond. Ticker symbol is ZFL, and the return for it has been 1%. Typically, when the stock market is doing very well, your bond market does not do well, and vice versa. When the stock market starts to crash or stock market starts to do poorly, your bonds are there to kind of protect you and the bond market do better. So it's a little bit of a safety net for you to mix bonds and stocks. At the same time though, if you're young, it is strongly advised that you invest majority of your funds into stocks, because over time, the risk that you're taking is going to pay off over the long period of time, particularly if you do not need your funds right away. The cash account is an account that Wealthsimple holds for you, and as you put money into your Wealthsimple, the funds first go in there, and then gradually, on a frequent basis, they get invested. I'm also going to quickly show you my other account, which is my tax-free savings account. Let's take a look here. You can see in this account, I've grown considerably over the past several months. Again, it's a similar type of risk tolerance, and before I show you the holdings, maybe I quickly walk you through this graph here in the middle of the screen, as you can see. So with Wealthsimple, what's interesting, it kind of projects how your funds are going to grow over time. This is again one of those tools that allows you to kind of project and get inspired how your day-to-day savings are going to pay off considerably over the long term. So if I continue to invest the way I've been investing with the automated savings plan that I have, according to Wealthsimple, highly likely that by the age of 65, which is closer to about 30 years or so, I'll be growing this fund, the tax-free one savings account, into a $600,000 of a portfolio, which is exciting. At the same time, you can also move around on the graph and see by which age, what is the estimated savings that you're going to have. But let's get into the holdings for tax-free savings account. So in this one, again, I have VTI with a performance of 10%. Now, keep in mind, with my tax-free savings account, this account has not been open as long as my other account. So that's why some of the performances might differ. For international equities, unlike the other one here, we are invested in XEF. So it's a different type of account. I have closer to 110 shares with a return of a 7.6%. Emerging market equities, EEMV, a similar type of account, the return 0.2% and 34 shares. With XIC, again, Canadian equities, I'm based here in Canada, hence I have a lot more exposure to Canadian stock market and ETFs. What's unique about Wealthsimple though is that they are currently available in 3 different countries and regions. They are available in Canada, US, and the United Kingdom. With global equities, I also have 14 accounts with a return of 2.2%. US equities, 14 account, 11.4%, and you can see how my bonds have been performing as well. There you have it, folks. I hope you enjoyed this video. If you did, I appreciate it if you hit the like button, and please subscribe to our channel. We post several videos every week to inspire you about investing, finances, as well as personal development. With that, thank you so much for following Moementum channel. Hope to see you on our next video.